Hello, I think I'm audible. Okay, guys, it's part two. Video two. Practically speaking, it's episode two. Okay, you actually had discussed about the balance sheet and the statement of changes in equity. Right now, I'm planning to take the income statement. And one more thing is notes to financial statements. This is my plan today. The video. And then I will be taking the cash flow statement. Anyway, it may take some time, so that's the reason I'm keeping it bit aside. Okay. Anyway, in previous session, I explained about the balance sheet and the statement of changes in equity. I hope you remember everything. Let me refresh the memory just a bit. I will be taking to the explained about the planning and everything exam related. It will be available in the first video. The previous one. Yeah, the balance sheet. I think I need something. Yeah, why don't I use it? It will be great. Okay. Okay, the balance sheet. Once again. Okay, it's the Zoom meetings. It's a permanent account and I explained how it accumulates the transaction as the contrary. The income statement is the temporary account. It will be closed at the year end by transferring to the retained earning, practically to this balance sheet. By for detailed overview, you can refer the statement of changes in equity or statement of changes in stakeholders. The names, it have quite a lot of other names. So I think the balance sheet will be like that. It will be prepared on the 31st of December. Anyway, we are preparing for the US based organizations, companies, anything. We are discussing from the point of view of the company, from not from any other point of view. You can apply it for any type of organization, but everything else, something like add on. If you are making a partnership concern in India, it will be ratios like 1:1, 2:1, something will be there. So for that, they need to make some agreements, everything, blah, blah, blah. If you incorporated under the company, there are limited liability corporations are there. If you look into some of the education institutes like Hawk International, like it's an LLC. Yeah, if you want, you can look into it. So anyway, to run in India, you need incorporation in India too. So like sometimes they may have come up with some ideas to make their organization to be in some other countries or continents. Anyway, in India, you can you can have your organization in all different states, provided it have kind of some GST compliance or there. You can check with the local experts or anyone, so they may guide you if you are planning to start any business. If you ask me, hire a expert, learn everything, get a documents. What to do, what not to do, everything for a year with the help of them, run the organization. Then run it by yourself. Maybe you need to file GST, TDS, lot of complaints are there in India. As the same in US also, there are quite a lot of complaints are there. Even to file the income tax, you need to qualify EA, the enrolled agent, or if you're a CPA. But when it comes to tax, the EA has a lot of knowledge. The enrolled agent, it's a three papers. Like if you want, you can give a try. That's one of the thing. Anyway, the balance sheet, the asset, liability, and equities. The asset is nothing but past, present, and future. The liabilities and assets, the past transaction, present obligation or title deed, the future economic inflow or outflow. So these things will be there. And as the same, if you look into the income statement, it has the revenues, expenses, liabilities, and the gains. The net of will have net income. Anyway, we are going into the deep of the income statement. Anyway, as much as possible, I will cover it. I'm not planning to write anything. Anyway, I'm using the typed material. Okay, the statement of owner's equity and notes. It's the just if you remember the format, that's it, because it shows the movement. Shows the movement of equity. That's it. For example, the opening balance, net income, preference dividends or common dividend, and issuance of common stock. Even if you are making any issue of the preference stock, it will be also added. But usually the preference stock are not at much in circulation. If they ask any question, you can just add a line. That's it. Remember about it and other comprehensive incomes. What it shows is just a movement of the equity. At the same time, if you look into the cash flow statement, it will show the movement of cash flow. What comes in, what goes out. Anyway, we will be looking into it. And I'm planning to show you the real life financial statement of a company. That's it. And I'm expecting you to make a comment like type of CMA, like a law of attraction. If you put a lot of effort and if you are typing it, it'll have some impact. Anyway, I don't want to miss the 0.1 percentage of the success formulas. So that's the reason I'm expecting to type it. And type where are you from? And did you learn anything new from me? Maybe like in past session, I explained about asset. So if you understand asset definition, you can't recognize the internally generated goodwill because there is no past transaction. Present title deed, it belongs to me, but future economic benefit, damn sure I have it, goodwill. But there is no past transaction. That's the reason we can't recognize the internally generated goodwill. So like that, maybe like you may learn something. So let me know about it. And I have shown which is right and wrong. The asset, it should be on this side. The liability should be on this side. Anyway, you won't have these kind of formats when it comes to the companies. Just for your understanding, I've shown it. And the current is nothing but 12 months or operating cycle, whichever is longer. If it's 12 months, if the operating cycle is 36 months, if it's more than 12, then take it the current is 36 months. So anything which falls under the 36 months, maybe the like if you are planning to settle it or realize it within 12 months or the operating cycle treated as current. If not, non-current, that's it. Okay, if it's the operating cycle, you will take the operating cycle value. Example in this scenario, like instead of 12, if you take 36, current. Now the operating cycle is 9 months, so you can't take 9 months, you need to take 12 months. The minimum criteria will be like 12. Like that. Like if you remember your bank minimum balance should be the $1,000, 500, like that, as the case maybe. So like that, there is a criteria for it. So remember about the definition. Sometimes they may give something, they may realize that some point of time and all. Sometimes they may ask you, there is a long-term asset or sir, not the long-term asset. No, okay, long-term, okay, no. Just it's the long-term loan. Think in this way, it will mature in 3 months. What will you do? So these type of questions are possible. Yeah, it's think in this way. Loan tenure is 10 year, but right now within 3 months you need to settle. So what classification? So let me know your answer. Current or uncurrent? There is specific condition is there. Look into it. There are MCQs are also available in it. That's it. Anyway, if you look into the order of liquidity, how fast you can realize the cash in the cash into cash. That's the order in this. At the same time, if you look into the current liabilities, for whom you need to make the payment fast and first for account payables, or else you won't get the raw material. Payrolls like employees, I think so. You like if you won't pay, they will leave. Then income tax. Anyway, it's the income tax you need to pay like based on the previous year income. You need to pay like something called estimated tax. Uh, like practically speaking, you need to pay it in advance, something which, as I said in EA, it's explained in depth. If you want to explore, there is an option. So that's what I'm trying to say. So anyway, the long-term debts, due bonds and everything. And as stockholders equity, I gave the format like the opening balance, and we are the net income, and we are the common dividend, preferred dividend issuance, other comprehensive income item, and the closing balance. Yeah, if you have preference shares also, you can add it in this line. Anyway, it shows only the movement of equity, how it changed, the opening balance and the closing balance. Beginning balance, add something, separate something, you will get the closing balance. That the base analysis. Okay. The beginning balance, opening balance, the ending, the closing. What do you add, what you separate? So it will show the movement. How much income, net income, did you paid any dividend? If you have made any issue, is there any changes in the other comprehensive items? So everything. So it's just a glimpse about it. Anyway, I gave explanation. Just give a read. If you want, just put a pause You have the liberty to do those things, and like anyway, the technology have the upper hand. So you can pause the video and you can give a read if you want to for in-depth understanding. And the benefits, I made it as short and sweet anyway, like it's a revision. So I made it short, but explained everything in depth little bit, like why we need the balance sheet and the financial statements and everything. Anyway, for last but not least, anyway, it's the financial position. It shows the financial performance. Sorry, like statement of equity. Yeah. Once again, okay, sorry, I thought I had written it as different format. Once again, okay, sorry. Okay, the balance sheet, it shows the financial position. If you take the income statement, it will shows the performance, financial performance. Example, it will show the net worth of the company, the balance sheet. It shows the profit or loss. And if you choose the equity, statement of changes in equity, it shows the movement of equity. That's it. It won't have something new. It everything in between these two things you will know what, like the net income, the dividends, and everything. And then if you see the cash flow statement, sorry, yeah, it's cash flow statement. Cash flow statement. Sorry, it shows the movement of cash. So this is the basic idea. Anyway, it's a point in time. It's for 12 months. If you look into it, it's for also 12 months. It's also for 12 months. It's not for 12 months. It's a point in time. Remember it. Understanding the basic is very important. That's the reason I'm kind of explaining one more time. These three things, these three statements for 12 months. Anyway, you know about the operating, investing, and the financing activity. We will be looking into it. Okay, that's enough. Let me jump into the topic called comprehensive income and income statement. As I said, like I'm not going to write in this session. I almost typed everything as much as possible. Anyway, if you read the definition, it will have a little bit of difference. Example, the comprehensive income is something known as changes in equity. If you remember it, let me scroll up. The net income will affect the balance sheet. For example, equity and retained earnings are there. So the net income goes to here. So the example, the opening balance is 1 million, closing balance 1.1 million. What is the change? 0.1 million. What is this net income? So that's the way in which they are presenting. So don't think, array, what is this new? So that's the reason it's a changes in equity. Okay. That's it. And anyway, like we will be discussing about the consolidated, the financial statements. So I will be explaining about the what is owner's minority interest, everything. And then there is one more thing. These two things are not included. What is this? Investment by owners and distribution to the owners. Simple. The issue of shares. Where will it go? Statement of changes in equity. Dividend. So it's not form part of changes in the equity due to the comprehensive income. Understand that, except these also have these things affect the equity. Other than this, what are these things? Net income is there, dividend also there, but dividend comes to the distribution to owner. So this one there. Then other thing, other comprehensive income. So these two things are the other than, except they are not saying we are having net income plus other comprehensive income. They are explaining other than the investment by the owner. Understand the terminology. Why are you saying, why are you repeating? Means these might be form part of your question sometimes. Investment by owners means issue of share capital, issue of common stock or preference stock. Anyway, preference stock won't be there. More or less, you can see the common stock and the distribution to the owner. What you got profit 100 million. What will you do? You will retain something. Example 70, and you will distribute 30. So this is what you distributed 30 to the owners. So like that. So understand the terms. This might be form part of your question. They will give some information about investment by owner, so on so. Calculate the comprehensive income, which never form part of the income statement. So it's as per FSB. Don't ask me how it's possible. Yeah, same. Including everything, excluding something like that. They are not saying what's included. They are saying what's excluded. Look into the term. They are saying except includes all changes, whatever changes happens to the changes in equity, except these two. Simple. Issue of common stock. Next, dividend. Anyway, if you look into it, a lot of things are there. Example, if I render service, instead of getting paid, I may get something like as an equity. Like that, lot of things are there. Anyway, pay attention to these two terms. If they want to make a question a little bit difficult, they need to make the terms a little bit complicated. They will use these type of terminologies. Simple, they might give you something. Net income, so on so value. And they will say investment by owner, so on so values, distribution of owners, so on so values, depreciation, so on so value, as per income tax, as per so on so. What's the actual net income? They will ask. Anyway, these two are not relevant for your calculation related to the income statement. Anyway, we'll be looking into the statements, and at the time you will understand. Let me look into it 1 second. Okay, this is the format, one of the format, the multi-step format. It will hide as the revenue. Anyway, it's for 12 months. It's like a video and it shows the financial performance. How well we are performing in this 12 months, profit or loss. Okay, first they will take the revenue, and if you deduct the cost of goods sold, you will get the gross profit. Try to write it the multiple times, the multiple step income statement and a single step income statement. The single step would be a little bit easier, so you did not to worry about it. Anyway, and then you will minus the sales and general and admin expenses. You will get the operating income. Don't forget what is operating income. It might be useful for your part 2. They might say this is the operating income. Yeah, I'm sure they will give you example. I don't want to confuse you. EBIT. Oh, EBIT. If you remember, the terms will be interchanged. I mean, anyway, I'm not going into this. It's not form part of part 1 right now in this topic. So I'm not explaining it. But just for your reference, I'm saying there is something called EBIT. If you remember, recollect it, connect it. If not, just forgot. No issues. Next, we will having the financial cost, interest and dividends income. Anyway, we invested in a bank, FD or some investments, we got the interest. We invested in some company, we got the dividend. Anyway, we took the loan, we are paying the interest expenses, and we sold something non-operating. Yeah, that's the one of the important thing. We have two revenues. Look into once again. Let me take it. Yeah, the revenues and then some non-operating gains and losses. Simple. When you earn something from your operations, what from your operation, it will goes here. Example, I'm a mining company. So what I'm getting? Aluminum, zinc, and gold. So what will I do? That's the main business. What I'm getting from it. Anyway, I'm getting some scrap. What to do? What's the scrap? The scrap is silver. What to do? The nominal value. So I am not included in. But suddenly the price of silver went up. So what? Right now I included in this revenue. Practically speaking, the one which you make frequently, and it's the main operation of a business. What you are selling to the company. I mean, selling to the customers. Hmm. Anyway, take Domino's. What their sales? The pizza. Other than that, they are selling anything? No. So you have to understand what is what. Where is it? Once again, once again. It's there. Okay, the term will be like core business. The revenue from the core business. What's my core business in this thing? Mining. So what I'm getting? Aluminum, zinc, and gold. So this is my core business. So I will record it in the revenue. Example, I am incurring some expense in relation to this transportation, some labors. So what are related to my core business? Example, I am getting scrap. Sorry, scrap. Scrap. Okay, wrote the crap and scrap and mixed it. Okay, it's core. Oh my God, it's core. So I look like love. Okay, if it's I was thinking this way, I'm making 1,000 millions. Thinking this way, I'm selling the scrap and getting 1 million. Hardly I'm getting 1 million. So it's not form part of my business. It's not even my operation. And not my operation is mainly mining the aluminum and zinc and gold. So that's why don't ask the zinc is possible or not aluminum possible. Just for your example, I took something randomly. So that's the reason it kind of may sound something different. Anyway, there is one more line item while comparing to the single and the multiple continuing operation before tax. One of the important thing is before tax, not the net of. Important, very important because it is before tax. You have to remember before tax. Anyway, in exam, they will say net of tax. After netting of tax, they will give you some value. Why? To make a reverse sorting. They say like you can't include something or you need to include something. So you have to understand what is what. The before tax item is very important. Then when you minus tax, you will get the income from the continuous operation. And then what is something called discontinued? It's not actually appear in everyone's balance sheet or financial statement, I mean income statement or in the financial statements. Example, I'm having a, okay, let me complete it. Like example, gain or loss from the operations of the discontinued component X. And if you include any disposal of something, example, okay, let me have an example. Let me scroll down. Let me take a page once again. Okay. Think in this way for discontinued operation. Floppy. Yeah, I know you may not know about it. That's the reason I took it. Like I had for 3 months, take it Jan, Feb, and March, and then I closed the operation. Closed. So for 3 months, I made a sale, and for the 3 months, I had some property, plant, and equipment. I sold it. So this is my income from the discontinued operation. So how to present it? Think in this way, I'm showing it with the same single way total revenues included in revenue. Everyone think I earned from the continuing operation. Example, right now, I'm selling what we can take pen drive. So I want to show some separately. So first I will show continuing operation. Second, I will show the discontinued operations. So think in this way here. Here, I will show the sales for 3 months. Hypothetically, take 1 million. I sold it everything. Second, I had a property, plant, and equipments. I sold it for some. I disposed. I sold something, so I got some gain or loss. Maybe anything may possible. Take it like zero point 0.2 million as gain. So where to display? You have to show it in the discontinued operation, not in the continued operation. You have to show a line of difference. You have to draw the line. The continuing operation is here. Once again, I'll take a highlighter. It will be great for it. A continuing operation and then discontinued operations. Maybe sometimes you may get loss. Think in this way, you got loss. What's the benefit? You will get tax shield. Sometimes you may get tax benefit out of it. Yeah, think in this way, you and me are partner. Okay, me and government are partner. Me and government are partner. 70 to 30 is the ratio. Takes tax is 30. So for me, the share, for me, thinking this, I earn 100 million. I have to pay for the government 30 million. And for me, the remaining, example, the shareholders. So practically speaking, government and me are partners. Government and the company are the partner. Think in this way, you will understand this. The government and the company are the partners. Partners. So practically speaking, if I earn something, I will share my profit with the government and I will take something. At the same time, I will made a loss. You don't worry, I will give you the benefit. So the government will help you to bear it. Like you will learn it in the deferred tax liabilities and deferred tax asset. How will it will have? There is something called carry forward of loss. You can carry forward this. Example, I have loss of 100 hypothetically. You will say you can carry forward. For example, next year I made a profit. I hypothetically take 1,000. The government will say you minus something. Then you pay. For that you pay tax. Practically speaking, you have to pay tax for this 100. Yeah, I made 1,000. Out of it, last year loss is 100. And then I'm paying 900. If I'm paying it 300 is to 7, example. But right now I'm paying on 900, not on 1,000. I'm getting tax benefits like tax shields. So anyway, there might be some benefits from it if you are making any loss out of the business, the discontinued business. So you can show it as in such a way. The MCQs will be drafted in such a way. So make sure you understand this. The line item is net income. Sorry, the net income includes the continued operation and the in discontinued operations. These two things are form part of the net income. Anyway, we are not into the other comprehensive items still, but we are discussing the multi-step income statements. So remember the net off is very important term and discontinued operations details. Sometimes they will give the net income and net off income from continuing operation. They will say what is the discontinued operation. They will give X. For example, they give these two words and they will put some manipulations. Yeah, that you will confuse. So you have to understand what they are asking. Okay, from example, as I said, a floppy. Yeah, okay, it's gone. Okay, no issues. Okay, from floppy, for example. Okay, anyway, let's go for the general topic. Okay, the comprehensive income includes two items. One is net income and other comprehensive items. Anyway, there are around 14 or something items. You have to memorize it, which I can't do anything right now. So the other comprehensive income, if you remember the statement of changes in equity, you might see net income, common dividend, preference dividend, issue of common stock, and then other comprehensive income. It will go for an accumulated other comprehensive item. That's what they are saying. We seen in the statement of changes in equity. Where it came from the comprehensive income. Okay. So will it come for every organization? If they have the transactions related to other comprehensive item, then they will have it. So what are they? We will look into it. Then before that, let me have some basic understanding. It includes the revenues and expenses, gains and losses, which we will get the net income from the continuing operation, and then we will have the discontinued operation. Then we will get the net income. Okay, the net income will be the form part of these two. And then it's based on accrual basis, not on cash basis. Example, 12-month rent I didn't pay, but as per accrual, take it. I paid for 14 months. Can I recognize? No, take it for 12 months. So practically speaking, we are matching the expenses with the revenue and it shows the result. Whether I am a pass or fail in exam, if you'll ask me, as the same revenues of operation for it 12 months. Don't forget it's for 12 months, shows profit or loss. It's like a movie, as I said, it's 12 months. Why? The balance sheet is a picture. So that's the reason the income statement is a movie. It is actually speaking like if you look into the rent expenses, Example 12 million. It will show for 12 months, not for point in time. But the net income will be transferred to the balance sheet. That's different story. But you have to understand it's different from the balance sheet. Anyway, it's a temporary account closed in the year end. Anyway, you know the retained earnings, the net income will go to the retained earnings, and then the profit will be distributed to the common dividend or the preference dividends, as the case may be. It's here, the retained earning. So every year you will have the income statement, the opening balance. Yeah, zero. Don't think it will have balance. It is zero. So it's very important. Remember it. I don't know about how you learn it, but anyway, yeah. In addition to that, it will also have a EPS. For example, it's divided by number of shares. Okay, let me write it down. Okay, we will have the earnings available to equity shareholders. 100 million means number of equity shares, hypothetically 10 million. See, if you want the EPS, 100 million divided by a million, zero, zero cancel, you will get, practically speaking, earning per share. Earning per share. For if I'm holding one share, what's my earning? 10. If I'm having two, if I'm having 1 million, so like that. So if you have in the simple way for 1 unit, if you look into the purchasing anything from anywhere, you will look what's the unit price. Example, biscuit, 20 cent. They won't say the entire bundle cost, hypothetically take $10,000. Then you have to divide it by so number of units, then no. So like that, we are also making it a simpler form. That's the reason we are having EPS. We are having it very in depth in the part 2. So I'm including it anyway for presentation purpose. When the organization presenting to the SEC or for the regulatory bodies, the direct and indirect user, the indirect user have someone, yeah, that person. And if you look into the internal external, the external users have someone from government. Yeah, they have some set of guidelines. You need to present it in such a way. The FSB is there. They are saying you need to present it in such a way. In India, if you look into the Companies Act, they are saying like you have to present in Schedule 3 format, like that. Anyway, the operating income is nothing but the revenue from the core business. Core, that's very important. More than that, that's far enough. Including interest income, dividend, interest expense, non-operating gains and losses, and income tax. Remember, these are the line items they make you and give some value. Literally, they will make and they will insert one value in it as a operating activity to make you confuse. So give a read, even if it's a silly thing, you have to remember. Anyway, at the exam, at the pressure, you may not see that one line item. So you may calculate wrong. For example, GP calculation, they might ask you. There might be one line item which is form part of the core operation. They will include in such a way, if you read it from beginning to end, example, from these two, you will think it's not form part of the operating income. Operating income, it's not a core. But they will have one line item somewhere in between that. Anyway, it's an MCQ, so they have to use their own ideas. At the same for the continuous operation, you have to show everything in separate way. Example from operation, financial incomes, everything. Actually, it's rated for only for the continuing in future. Like for example, in future, I'm generating, for example, by selling pen drives. Anyway, for better understanding, I'm taking the old logic. So don't say, I know about it. Yeah, you know about it. Anyway, for understanding, I'm saying for distinct understanding, the floppy is extinct. Like there is no more the floppy. Yeah, there are use and there are some organization using, like for example, the freighter jet, as I said. So you have to remember these things. 1 second, 1 second. Yeah, just I need to power it down. Okay, that's it. And which doesn't includes the discontinued operation. The exclusion is nothing but floppy. 1 second. That is here. take it as a pen drive, and for exclusion, the discontinued operation as a floppy disk. Anyway, you need to show separately. Think in this way, I am the investor. I need to know from which operation you are earning how much money. So that's the reason they will always show in that way. The presentation you need to think from outsider, the direct or indirect user or internal or external users point of view. Think from users point of view. That's the reason. Anyway, if you go for the single step line item, it will be very easy. The format is very easy. If you look, that's it. What is what? Total revenue minus total expense. That's it. Very simple and eliminates classification problem. So it's very, very, very easy. When you look into it, just think in this a total revenue. It's from operation or not, I don't need, I don't care. So the single step income statement item is total revenues minus total expenses equal to net loss. That's it. Simpler formula. That's it. Really, that's it. Okay, the elements of comprehensive income items, the revenue is the first line item. Anyway, it's the inflow or enhancement of asset value. Example, I have a raw material. I convert it into finished goods. Think in this way. I have cotton. I made it into cloth. I made an enhancement of the asset or settlement of liability resulting from delivering goods, producing goods, or rendering service or other operations. Practically speaking, which you can say it as core operations. Core business activity. Very important is core. For what your organization is incorporated. Example, I'm manufacturing pen drive. So I'm delivering the pen drive, I'm producing the pen drive, I'm rendering service. I mean, in this case, we are not rendering any service. Anyway, if it's service or Netflix, it's rendering services. So those things are known as their revenues. Anyway, there is something called recognition of revenue, which actually it's not in this income statement. Anyway, in future, we will be discussing in depth. Once again, let me explain it this to why I need to ignore everything. It's hard to determine what to explain, what not to. That's one of the thing. Think in this way. I'm the seller and buyer. There are two persons. Seller under the obligation to sell. The seller is obligated to sell. I mean, I'm under the obligation to pay the money. I am obligated to receive the goods. Right? That I'm and the seller have the right to receive the money. At the same, if you get the buyer also have the right to get the goods, and the buyer is under the obligation to pay. So when the revenue is recognized, when the performance obligation is satisfied, think in this way, I am delivering the goods to you. That's it. I can recognize it. I didn't deliver it, so I can't recognize it. Example, I'm going and paying 20 cents and getting the biscuit. I can recognize it. What's the perform obligation? I need to give the biscuit. It's kind of law terms. So anyway, like the accounting rules. Anyway, as the same, when it's outflow, when it's an inflow, it's a revenue. The inflow, very important is inflow. At the same, when it comes to the expense, the outflow is the practically speaking, the revenue, you receive money. When it's expense, you pay money. That's the reason it's an inflow, it's an outflow. For producing the procuring goods and providing services, other activities. Maybe like when the work is when our work or product contributes to the revenues. For okay, I think okay, let me take an example. It's hard to come up with example when we are making a revision. When it's like a normal class, you can explain everything in depth. But when it's revision, it's kind of complicated what to do, what to explain. Think in this way. I'm buying goods. Okay, think in this the raw material is cotton. There is a farmer, my warehouse, transportation cost is there, labor is there. For example, here also labor is there. I got the raw material here. What are the costs incurred? Though for carrying the goods from the land to the vehicle, and the transport is fuel and the taxes, something, for example, the tolls or anything. And anyway, when the goods reached my warehouse, I need to incur some expense, manpower to carry it into my warehouse. And the same, I need to take it to the machinery. The machinery will convert the raw material into work in progress, and then it will convert it into the finished goods. Practically, I am enhancing the value of the goods. Right now, it will be stored as a finished goods in my warehouse. So expenses like, for example, the labor, transportation, fuel, taxes, labor, and the warehouse expenses like I need to use the machineries, and I need to use the electricity, I need to use the labors, and I need to use some tools. Everything will be the outflow, and I will get the info when I sell the finished goods. Anyway, until I sell the goods, what are the things I am incurring? Expenses. So you have to understand what is inflow and what is outflow. Maybe like it's kind of simple explanation. And when it's from the operation, you will name it as revenue and expenses. Okay, when it's not from the operations, example, the gains resulting transaction other than revenues or investment by owners. As I said, investment by owners. Make sure it's, practically speaking, it shouldn't be there, because we know the investment by owners doesn't form part of the income statement. By the definition, say it shows the changes in the equity, excluding investment by owners and distribution to the owners. So they made it in such a way for understanding purpose. So we can't change the rule, but you have to understand the thinking from different point of view. I know income statement, yeah, but you have to understand what is income statement. So what is the gain? Simple. I have the property, plant and equipment. As I said in the floppy disk, I sold the machinery. Example, it's a 1 million my book value. Sold it for 2 million sale value. What's the difference? 1 million. The gain. This will be the gain. Anyway, sale of investment. Anyway, think in this way, my main course of business is not trading. Okay, if it's the trading, the investment will become the revenue. Example, I'm a stockbroker or someone related to the financing activities. So for them. Example, sale of machinery. I am the manufacturer for the machinery. So the sale of property and plant will become my core business. So you have to understand what is the core business. Example, I am selling the property, plant and equipment, which is a revenue generating asset. So that's it. Anyway, investment example, I invested in some company. I'm invested in Tesla, 1 million. Suddenly they said that due to new announcement, the stock price went up. Example, it became 5 million. What's the gain? 4 million. Damn sure you need to show it in the gain. Why? Why we need to distinguish? Think in this way. I am the owner of the organization. I mean, I'm planning to invest in the organization. You have to think everything from the point of the users. Think in this way, revenue is equal to, example, the 1 million from that sale and 4 million from the investment. What's the revenue? This itself 5 million. What's my revenue from operation? Hypothetically 1 million. I'm using single step, revenue equal to 6 million. Everyone think, array, the company is performing very well. But they don't know. I sold my equipment, I sold my investment. So the 5 million is from the, not from the core activity. So that's the reason you have to distinguish what is the revenue, what is gain separately. So you won't confuse anyone. Think in this way, I'm the banker, I won't accept it. I need the classification. You think from a point of view, you are the banker or you are the investor, some from the, not from the point of your company, but you are interested in the company. Like that, if you think, you will get the understanding. What's the loss? Same thing, which decreases the equity. What they said, decreases in equity, resulting in transaction and events. You made a sale or something. Think in this way, same. I sold the 1 million worth of plant, property and equipment for half a million. What's the loss? Half a million. Same, I sold the investment. Same, the 1 million I purchased from stupid company, 1 million suddenly became like not even $10,000. It's a drastic loss. So that's the things which are having impact on the equity. So understand the terms, changes in equity and everything. Give a read. I hope everything will be in books. Okay, these are the things from, okay, revenue and expenses. These are the things related to the revenue, delivering the goods. Okay, I manufactured the finished goods, I sold it. They are saying deliver. So I delivered the goods. I incurred transportation cost. It's an expense. I purchased the raw material from farmer. Procurement cost. So producing cost, delivering cost, rendering services. Think in this way, I'm cooking. I'm a five-star chef. You asked me to come and cook in your party. I'm coming here. I'm rendering some services. So I'm charging you. So revenue. I incurred some expenses, transportation cost. Bro, what's transportation? You might be coming in bus or something. Yeah. Anyway, what about the ingredients? Okay. So I purchased my own van. So I came in my own van. So I transported the ingredients. So that's the thing. So these are the results from the revenue and expenses. So you have to understand what's the revenue, what's the expenses, what's the gain and losses. There are some other gains and losses, not which form part of it. Example, this is very important. The exception, give a read. The gain on from the part of normal business activity. They may be presented with the revenue and expenses. Securities trading companies. Example, I purchased a building. I sold a building. What is this? Yeah, I sold. Example, I purchased for 1 million. I sold for 2 million. I got, what is this gain? No, I'm a real estate agent. I'm in a construction business. So this is my core business. When the trading company makes the sales and everything, it's the core business. For them, it's a core business. Core business. So you have to read the question multiple times. What's the business model? Business model. Okay, there are something called an unusual gains and losses. Example, fire loss. Think in this, I got insurance. Unusual gain. I mean, it's not in a recurring nature. The fire won't happen recurringly. Think in this way, my factory, the cotton. I insured it with the, or I mean, I would read 10 million worth of in the warehouse. Suddenly, not my fault. Some electricity issues, fire, loss. The insurance company, after looking into, they may gave me 10 million. So what is this? Unusual gain. Yeah. Okay, the fire loss. As the same as I said, I lost the investments and the restructuring changes. Example, I'm planning to change my business operation. So for that, I hired someone restructuring. Example, I'm cutting down the lot of business activities. I'm planning to liquidate a part of my things. So like that. One of the important, continuing operation, discontinued operation important. What is operating and non-operating? Example, the core business, which is not the core business. Okay. You are saying like discontinued, discontinued, discontinued. What is discontinued? The floppy disk, my discontinuation. Think in this way, there is a strategic shift. Right now, if you go and ask in the market, the floppy disk means they will refer me only, one and only person, hypothetically. The monopoly, it's not possible. Hypothetically saying, yeah, it's possible. Think in this way, you have Google Play Store in your mobile. Can you download the app from any other stores? Like there is only one. So monopoly is there. As the same, if you want to download something in your iOS, you need the Apple Store. So they are monopoly. Practically speaking, they are monopoly. In real life, if you take in India, the Indian Railways is monopoly. It belongs to the government. It's not privatized. So you have to understand what is that. So anyway, for example, in this scenario, the floppy disk is my say I sold it. There is a strategic shift, a major effect on my operation. Usually hired bigger unit, I have a bigger machinery. I will input, I will have the example, the raw material, I will get the finished goods as the floppy disk. I am the manufacturer. Suddenly what happened? I closed it. Suddenly closed. Right now, my business operation became smaller, hypothetically, or maybe bigger for manufacturing the pen drive. There is a strategic shift. Don't worry, when you are reading the question, they will say there is a strategic shift in this business. There is a major effect. Right now, everyone know it's in news, everyone affects my operation, thinking this, these employees know how to make floppy disk. They don't know how to make pen drive. Hypothetically thinking this way. Anyway, it's a manufacturing. No, anyway, they don't know. They will have the idea. Anyway, they thinking this way, there is a major shift. Or thinking this, I am located in US. Suddenly, Due to some reason, I'm incorporating my operation in Russia or in India or in China or America. Sorry, America from America. Okay, somewhere, ma'am, if even change in the geography thing, or I'm kind of diversifying my business. I sold entire floppy disk or pen drive completely. I sold, and right now I'm into selling tomatoes, dealing with vegetables. There is a strategic shift. Thinking this is selling memory storage device to selling vegetables. There is a lot of difference. Major equity investments are sometimes have a discount. Example, there is a major investor in my organization. They are having like, I don't like it. Example, suddenly my organization went public. Yeah, a very rich guy purchased my company's 50 more than 51 percentage of shares. Think in this way, he purchased every share 100%. He is the owner. He said, I don't need this company. I mean, I need to change the business operation from floppy to pen drive, hypothetically, like that. Anyway, how to report? Simple. You have to find out the what is from the continuing operation. Then tax on the continuous operation. You will get the income from the continuing operation, and then you have to report the discontinued operation. The discontinued operation, whether gain or from the operation or selling some assets. I mean, the property, plant and equipment which I holded till now for making the floppy disk, suddenly I sold it. So like that, you have to present. This presentation is very important. As that said, in the multiple step, my income statement itself I've shown. Anyway, the same is in shown separately for your understanding. So practically speaking, it's reported on net of tax. It includes the operating results and disposable income. That's very important. The net income includes the net of tax and includes the operations from the results. And example, there is a think in the same P&L for this as profit. Property, plant and equipment, which is a fixed asset. I sold, I got a profit. So that's the reason I'm showing in two line items, two different things. Because think in this, it's a P&L, it's a balance sheet item. I mean, the disposal, okay. For your understanding, explaining in the two-way. What are the two components in the this line item? Okay, held for criteria. Okay, one of the important thing you have to understand these things like you are saying you are discontinuing the operation. So how it defined? It's in the following manner. One, the management commits plan to sell. Anyway, I'm planned fixed. I'm planning to sell, and right now the company is available for sale. There are a lot of buyers are there. Probably within a year I will sell. The market value at reasonable price. The plan unlikely to be withdrawn. Everything is same if you look into the way. But why there are six line items? Because in exam they will give the company's plan unlikely to withdraw or change in the significant changed significantly, or they will give these six line items and they will say it's held for sale. That means they don't say this is a discontinued operation, or they may say there is a significant shift. I mean, strategic shift, sorry. Strategic shift or significant major, yeah, but strategic shift is the word. So make sure about it. And I want you have to memorize these things. Anyway, you need not to memorize. If you look into it, everything conveys the same thing. The company is ready to for sale. Think in this, I have a car. I'm saying sale for, I'm put on board. Example, the house rent. If you just tenant vacated it, it's a highly well-known property. So everyone knows it's for sale. I mean, it's for rent, like that. If you have to think from the different point of view. Okay, you are the buyer or you are the seller, like that. More importantly, it is reasonably priced and everyone is ready to buy and it's available immediately for sale and a plan is done. That's it. The board meeting done, the AGM is done, the C-suite made the decisions, everything is finalized. That's it. The only thing, I need to get the money, I need to hand over the property or something. I mean, or I need to discontinue the operation, like that. Sometimes they will give the business is done with on hypothetically 31st June. Why? They mention from this operation as on 31st up to 31st, the company had 100 million profit. Then they won't say anything. They will say that they didn't sell, but they said the management is committed to sell, so they stopped the operation, like that. The MCQs are possible. Each line items they will include these line items and they will say the income from continuous operation. They will ask you the what is the income of discontinued operation or what is the net income, something they will say. Okay. I need to take a breath. Sorry. Give me a minute. I need to drink a water. When you are writing, at least you can take a break. But when you are using the typed things, the typed text, you have to explain everything line by line. Anyway, I need not to write everything. I think in this way, if I need to write this 6 line item, it take time. Anyway, I will explain, but just if you give a read, you will understand. Held for sale criteria. Sometimes they may say that as of 31st June, the company's planned to make it as held for sale. So you have to know the keywords. So you can easily, okay, these are the keywords. So they may give 10 to 20 lines, but what's the matter? It's a discontinued business. That's it. Okay, right now, what to do when it's become discontinued? Simple, they will make a reclassification. Purpose for improve comparability. What is from continuous operation? What is from discontinued operation? For comparability, think from a point of view users. Think as a direct user, think as an indirect user, internal and external. From each point of view, think you will understand. For example, think in this way, I'm an employee. I'm working in a discontinued operation. What will help? Okay, that's it. I can't work here. Damn sure. So think in this way of investor. I'm planning to invest in a floppy company. They shown me the income statement. Oh, they stopped manufacturing the floppy. I don't know. But when I look into the income statement, I know. Okay. So they won't invest. Or they are planning to invest in new technology. Okay, it's okay. They are having a previous like the floppy disk they sold. So they are manufacturing pen drive like that. Even it helps the income tax for, I mean, the government to calculate the income tax. Anyway, they don't they dwell into those things, but they will look into the net income. I mean, the what's the profit, how much they are paying. Okay, there are intra-period tax allocations. How will you tax allocate? You might have seen it for continuous operation, for discontinued operation, and other comprehensive items. For example, continuous operation, tax provisions, and income from continuous operation. At the same discontinued operation, you will have the two things from like the profit or loss from the business and the profit or loss from sale of some disposable items and tax, and then you will get the income on discontinued business. Then you will have the net income, and then you will have other comprehensive income. Don't think it will have 2 periods. Only for 1 year you will be making the allocations. Okay, what's the benefit of income statement? Anyway, right now, until now, you explained everything, yeah? What is benefit of income statements? Simple. Last year, my profit 10 percentage. Current year, 12 percentage, 15 percentage. Great. No. Hypothetically, compare with the GDP. You are growing with the GDP. So it's not good. When you look the figure separately, it will help to evaluate the past performance. But when you compare with the GDP, you will know the company is growing with the country's economy. Think in this last year, the price of the product is 12, right now 15. The company also doing the same. So what will you know? No, there is no increase in price. Increase in the economic condition. That's the reason there is a change in price. That's it. So comparing with competitors. Example, I'm an EV vehicle company had 10% income, I mean 10% profit, and comparing with Tesla is 9%. Thinking this is the operation of the business. So we can't, I think this, I'm a small business. I have hardly, I will sell one or two in a month. Thinking this about the competitor, Tesla. Book definition, competitor, Tesla. Okay, I'm EV, he also EV. But you have to make a reasonable comparison when it comes to these things for evaluating the past performance. Intercompany, intra-companies, industry limits are there. For example, as per the industry standards, every companies have different types. Um, have you ever used like the portals like mm, stocks analysis? If you look into it, they will show the peer review. Same kind of businesses. Example, if you take Tesla, means if there is MG, they will compare it to the MG and everything like that. Predict future performance. Think in this way. The company is growing with the GDP. So for me, I understood the next time the GDP will be so and so. Then I can predict the company will grow at 16% rate. Not only that, even if it performs very well, also think in so instead of 20%, 24 percentage, 30 percentage, 36 percentage. Great. Anyway, and assess risk. Think in this way. My profit is like current year 1%. What about next year? If it's 2% also okay. What if it goes down? At the same assess and risk. Uncertainty is nothing you can't predict. That's the uncertainty and the risk and everything. And the limitations are there. It's mostly based on estimation and assumptions. For example, take property, plant, and equipment. Life of the asset. Anyway, we'll be looking into the accounting policies in the notes, which I will be explaining. Different accounting method, depreciation method creates a comparability issues. Think in this a company A uses WDV, company do LSLM. Can you compare it? Damn sure you can't. Same if everything is also same, the asset value is 100. For the first year, it may be same 90. So the profit have also impact of 10 minus. Example, take it's 90 also. The profit is also 90. Next year, they will minus 9. But next year, this company will minus 10. What will happen? Example, the company has 100 in second year, minus 9. Everyone think it's great. Sorry, 91. No? Okay, 91. Think in this way. It's 100 minus 10. Okay, 10, sorry. It will have 90. What will this company's performing well? No. The depreciation method is different. That's it. And only reportable revenues. Example, you can't measure few things. And lot of judgments are required in preparation of the income statements. Example, as I said, the useful life of the asset and the depreciations or estimates. Few things are unrecorded. For example, goodwill like the brand recognition, customer loyalty and quality. Example, Rolls Royce, brand. There is a product like everyone recognizes it like that. So we can't recognize few things. Okay, I think we are almost at the end. I think the net income plus other comprehensive item is equal to comprehensive income. Until now, I discussed about this. I haven't discussed about this. We will be discussing about the other comprehensive item, which also you can cite as accumulated other comprehensive income, which is a permanent account, but the net income, which until we saw is a temporary account. So don't confuse it with this. The accumulated other comprehensive income item. If you remember the equity statements, I mean changes in the equity, you might have seen the retained earnings and accumulated other comprehensive item. In this, net income will goes to this, the dividend will minus other comprehensive income item will go to this accumulated other comprehensive item. Okay, I will show you. Yeah, I will show you. I will show you. It's a permanent account and the items are recorded in a OCI, not included in the net income. Why? I will explain it because it's not actually related to the business, something like that. Okay, it's never closed. It's a balance accumulated. It is separate from the common stock and additional paid in capital and retained earnings. Okay, what is other components? Revenues and expenses, gains and losses included in the income, but excluded from the net income. Included in the comprehensive income, excluded from the net income. Simple. Comprehensive income is nothing but net income plus other comprehensive income. Other comprehensive income is included in the comprehensive income, but not included in the net income. That's what they are trying to say. That's it. The OCI will be charged to the AOCI, I mean accumulated other comprehensive incomes. The company may use the single continuous statement. Example, they will show you net income and the other OCI. And the third one, you will get an N. Or sometimes they will say this as a separate statement and this as a separate statement. That's it. You will get net income and it will have net income and so on. So things will add on. I will show you. Let me. Okay. I hope this is what the important thing. These 13 items are the other comprehensive income items. What to do? Pause it. You have the liberty to pause it. You have the technology. So pause it. What to do? Read it. Memorize it. If these comes in the exam, those are other comprehensive income items. So what are they? foreign currency translation adjustment. Have the $100. Maybe think in this way, $100. What will be the cost in India? Take it as 8,000 rupees hypothetically. Today also $100. Maybe suddenly it became like $7,000 because there is change. Is this actual? No. You will have those things. Like it won't have actual impact on the business. It's like hedging. Holding the investment in some company, there is a fluctuation in the price. Actually, I haven't sold like that. You will be having like example. Look into this. The unrealized gain on available for sale securities. Pensions, prior service cost as pensions, everything. Just give a rate. That's it. It's not big deal, but make sure you remember everything. Instrument specific or credit risk changes, insurance contracts, everything. Not much I can explain in this session. Yeah, I can explain each and every line item. Then I need a 1 more hour to complete it. Sorry, complete it. Anyway, yeah, this you can understand. Net income is nothing but the revenue minus expenses plus gains minus losses. So OCI is nothing but changes in the accumulated other comprehensive income. So the comprehensive income is equal to net income plus OCI. This goes to the, I will use different color. This goes to the retained earning. What about this? It goes for the other comprehensive income, accumulated other comprehensive income. That's it. Anyway, it's related to notes. Yeah. Let me share the Excel, the one which I will be using it for the explanation. Okay, I think it's visible. Once again. Sorry, I've been like speaking for 1 hour, so it's like have a toll on me. The revenues, net in revenues, cost of goods sold, you will get the GP, and then operating expenses, R&D, selling, and then you will get total operating expenses. You will get the operating income. Under there is nothing but gains and losses, which is not related to the business. This is related to the operation, main operation, the core activities. Then are things which are not related to the business, but which are realized. For example, I sold like that, and then separately you will show the financial income. If it's example, if you are invested in some marketable debt securities, as I said, you are getting EBIT interest, and you get EBT, and then income tax, you will get the net income. Then you will get the basic EPS, diluted EPS. Anyway, this just for your understanding, I'm showing it. I will be showing something else on the information of the financial statement. These are the things which are available. Example for available for sale securities. Look into it. This give a read. That's what I can say. Okay, this is for the notes to the financial statements. So that's what we are going. But these things are which gives explanation about the balance sheets or income statements or statement of changes in equity like that. Like they will given better understanding. They are not form part of the full set of financial statement, but it form part of the general purpose financial preparation of financial statements. So you need to understand what is notes to a financial statement, which gives additional information. Example, if I purchased an organization, the company will need to show it in the notes to account what's happening in. You can't show it in the balance sheet. Maybe that's discontinued operation they need to show. You can't understand why while looking into the income statement. For better understanding, you need to read the net income. Okay, and then yeah, this is what the important thing. Look at it. There is other comprehensive income item. I think there is no addition or subtraction. Yeah, sorry. Okay, usually what will you get means there will you other comprehensive income item. You will add or subtract what or something. As the case maybe, it will also form part of your other comprehensive income items. In this Excel, it's not there, but usually if you have these transactions, you have to include it in your statement. If not, no need. If you have, you need to. Okay, notes to financial statement, it's a supplementary information. Anyway, it's helps the user to understand what's happening in the organization, about the financial positions and the results of the organization. As I said, it's not form part of the full financial statement set, but it's include in the general purpose financial reporting. As per reporting requirement, you need to do. What is it? It clarifies the amounts on the face of the financial statement. If something on the financial statement you don't know what is it, look into the notes. And it explains the method used to determine reporting figures also. Sometimes they may use some depreciation methods, accounting methods. Let me show you that. And sometimes it gives the breakup. Example, if you look into inventories, raw material, WIP, finished goods. So like that. Plus, it enhances the users. Not only in simple things, it will have some add-ons. Example, like impairment loss on fixed assets. Why the asset became impairment? Yeah, you made an impairment. So why? What's the reason? Thinking this is obsolete in technology. So I'm impairing the asset. And then there is a depreciation. How you took the depreciation? WDV. What method? Example. Inventory valuation methods. And this is the full set, like the if you look into the balance sheet, the income statement, cash flow statement, some changes in equity. The notes is not formed part of it. Anyway, this is the important line. Understand it anyway. It's a revision. I forgot sometimes it's a revision and explaining sometimes in depth. So anyway, if you understand everything, I hope reducing your time for the preparation. I mean, when you are preparing for the exam, I hope it will be useful. Once again. Okay. Anyway, already I gave an explanation what is general purpose financial reporting includes the full set of financial statements, notes to financial, and then there is something called supplementary information, supplemental informations. If it's required, you will be included in. Anyway, what is the general purpose financial statements? It's nothing but the balance sheet, income statements, changes in equity statements, plus cash flow statements, and then notes and the supplementary things are general purpose financial statement. Don't forget, they may or may not ask the question because we are having the exam for 6 months. We don't know when and where they will ask any questions. So don't think someone say I will explain what will come to the exam. Don't play in their hands. Okay, accounting policies. It's important for the financial position. For example, balance sheet, for income statement and cash flow statements. Why? What method are you using in the performance of, I mean, preparation of the income statement, accrual method, and how it affects everything? If you are using cash method, you need to report it. Why you are using cash method? I'm a bank. Okay, just jokes about. If it's have any impact or changes, you need to mention it. The accounting things. Example, accounting. What is the important things about this? Financial reporting. What different policies and procedure, different results. Example, if I use LIFO, if I use FIFO, what will happen? I will have to show the things and what's the decision making, how it have an impact on others. And then for better understanding, the company may choose some accounting policies. They are using multi-step financial statements instead of single-step financial statement. Now you need to use the multiple step only. And you need to use it like for better comparability. You will having 2 years in post statements. Anyway, I will let me show you the things more or less that it's a most common thing like notes. It will be beneath everything like after cash flow statement you can see it. What's the purpose that it followed? Actually, you need to use it for the purpose of gap. And it explains the what are the principle you are applied and what are the policies are affecting the statement. Examples: depreciation method, SLM or double declining method. For example, inventory, what method you are using, like for weighted average, revenue recognition, timing and method, FOB shipping, like FOB shipping and destination. Shipping and destination is there. How what is thought? Consolidation, what kind of consolidation, which we will be looking in different chapter. Intangible asset, how you amortized. I mean, for tangible you will depreciate. For intangible amortization. And leasing, how you recognize operating or financing lease, you have separate topic for it. Okay, as I said, the examples. Okay, why I'm choosing FIFO and LIFO, and industry specific method. The, for example, bank need to show their financial statement different way. That's the thing. Anyway, I think okay, there is something called okay. Look into the disclosure requirement is that, yeah, disclosure. Sometimes you need to show as per the accounting standard code. Also, you need to show. So how you consolidated, what's the depreciation method, intangible amortization, inventory, same thing. Anyway, for disclosure also you need to show the same things. Anyway, if you think is something you need to include in the disclosure, you have to. This is our management responsibility. Sometimes you have to choose something policies are liberal or conservatism. What is what? Simple. If you use liberal, the current income will be increased. Conservatism. No, I'm not planning to take risk. Like that. Higher profit, lower profit, more aggressive, more caution oriented. Example, life of the asset you are using it. What? Lower the depreciation expenses, lower bad debt, higher the income. Anyway, you have to like took which one is which. I think it's over. Yeah. Anyway, okay. Anyway, okay. Oh, yeah. Okay, this is Tesla, the company's page. For example, I'm looking into the topic like 2025, 26. It's for quarter one anyway. Right now, when I'm doing, there is no available for quarter two, quarter three, and all. And if you look quarter three, quarter four, quarter one, we are having 10K, 10Q, 10Q, 10Q. What is what? Let me show you. Okay, let's take the 10Q of 2025. If you look into it, I think it will be visible. There it is. It's for quarterly. Oh my God. It's for quarterly, not for annual. Okay. One other important thing is it's not for entire year. But if you look into it once again, let me show you the financial statement, how it's shown. Look here, especially here, unaudited means it's not audited. If you look into the time period also, it's not for 31st December 2025, it's for September 30, 2025. But compared with December 31st, 2024, the one is audited, the another one is not audited. For the requirement of the laws and regulation, they are showing the quarterly returns. But if you look into everything, everything will be as per the law. Simple. If you look once again. Hmm. Think I need a highlighter. Okay, no issues. Look, the assets, cash and cash equivalent, short terms, the order of liquidity, and then operating lease vehicle net, solar lease vehicle, property plant and equipment, operating lease, right of use assets, digital asset, intangible assets, goodwill. It's not intelligent, it's purchased. There is a difference also. How it came, look into the notes, you will get the understanding. That's the reason you need to read the notes, how it possible. Okay. Okay, then if you look into the liabilities, everything will be same. Okay. This is for an unaudited thing. Like if you look into this unaudited, what about audited? That's something known as 10K. Okay, this is for annual. Look into it. It's for annual report. And form 10K is very important. It's when the organization audited something, it will show in the 10K, not 10Q. Look, anyway, this is actually audited Tesla book. Okay, Tesla's books of accounts. I mean, the annual report. For example, there is an IRS employer identification number, Texas. Where is its the address? And it's in NASDAQ. The symbol is TSLA. Title of class of common stocks. It's common stock. There is no preference stocks. Okay, very important. Sorry, like I need to use, it's not available in PDF. So that's the reason I'm kind of using it in this way. There is a lot of complaints, blah, blah things will be there. Like if you look into it, business related business risk, unsolved staff comments, it's a part one. Then there is something called part two, part three. We don't need everything. We need the financial statements. That is it. Yeah, it's in the item number 8. If you look into it, that is the finance statement. Yeah, consolidated balance sheet. And that there is an audited report is there, which we are, it's not formed out of our syllabus right now. So if you look into it, there is no something called auditor or unaudited. Because before that we have audited report. Once again, let me show it. Okay, look into it. This is the thing. Report of independent registered public accounting firm. Damn sure it's a CPA. Certified public accountant, public accounting firm, not an individual firm. To whom the board of directors, shareholders. One of the important thing, the direct users, indirect users, external users, internal users. This is internal, this is external users. So understand the logic why I'm explaining everything. When you look into the financials from different point of view, you will understand why there are a lot of like why they are included and everything. There is COSO is there, which also formed our syllabus, but it's in different unit. And I look into this is LLP, that to PwC, PricewaterhouseCoopers LLP, where location, date, thinking this with 31st December is the date of closing financial. Then 28th January, they audited everything. So do you think within 28 days they entirely 12 months? No. Quarter one, quarter two, quarter three, all audited everything. Quarter four also, month on month, they will do the audit. Anyway, the audit doesn't form part of us, like it is form part of CPA. And one of the important, the company serves as a company since 2005. Okay, look into the heading. 2025, 2024 comparisons. What happened? Current asset, cash and cash equivalent. Cash and cash equivalents, there is a change. Practically speaking, there is decrease. So there is a short-term investment is increased. Why? We have a question. Why there is increase? Almost 7,546 millions in millions, except per share data. So there is a change. You can understand the performance. What happening? Inventory, there is a change. Example, inventory. There might be raw material, work in progress, finished goods. They won't mention anything here. If you look into the notes, you will get the idea. So if you understand from the different point of view why we are having quite a lot of other things, you will learn about it. Anyway, the order is important. Look into the balance sheet. It's a point in statement, everything. The liability is also in the same way. And if you look, they don't have the one second. There is something called preference stock. There is nothing. Then why are they presenting? As per the present recommendation, you need to show preference stock, so on, so on, so, but there is no nothing. So they need to show. But if you look at the common stock, what's the value? What's the value? Yeah, I know. It's 0.001. If you look in India, it can't be in this value. But in US, you can have the fraction values. Practically speaking, 6,000 as per books. Anyway, they are having 3,751 to 3,751 practically millions. 3,216 million shares issued and outstanding as of so and so dates. 3,751, 3,002 and additional paid. There is something called accumulated other comprehensive income that to loss. In this year loss. This year it's profit. But it's not from the operation. Example, I am holding the foreign currency. There is a fluctuation. I'm holding some investment. There is a fluctuation. So like that, there is huge difference, almost 1,000. Anyway, minus 672, 361 means how much? So there is a huge difference where you can look into the notes to accounts, notes to financial. And retained earning is the total shareholders, non-controlling interest in the subsidiaries, 670 and 704, which we will look into the consolidation chapter. Okay. Anyway, it's Tesla company's books of accounts. The two consolidated. Look into the like the statement of operations and let me know what kind of it. We are having the revenues. I mean, it's multi-step or single step. Let me know about it in the comment. So it have the revenue from the operations, automobile sales, regulatory credit, automotive leases, and total. I think it's total of these all, and then energy generation, storage, service, and others. They've shown the bifurcation from what they are getting, and then cost of revenues. Automobile, same thing. If you look sales, and there is leasing expenses, leasing. There is I think there won't be anything regulatory related something. I don't know what is there. Anyway, total cost to the revenue. This is minus, and there is energy and storage. Respectively, they are showing matching the expenses with the revenues, cost of revenues. So if you minus everything, you will get the value. Anyway, it's not form part of your syllabus, but if you understand this, you can understand what is what. As I said, I don't have any discontinued operation, so it don't have any separate income from operation is there, and income from before income tax and a provision for the income tax, and we are having net income. So practically there is some non-controlling interest also there. So they have shown it in separate. So net income contribute attributed to the also there is no, it's entirely continuing operation. There is no discontinued, so the discontinued doesn't exist. Anyway, basic diluted. Okay, there is something called comprehensive income, which we know like what is comprehensive income? Net income plus other comprehensive income. So right now net income. They took the net income from the previous one. They are making the adjustment. Right now, if you look into the AOCI in the balance sheet, you know why there is a change. They are showing for 3 years, not for 2 years. Usually, it will show the above statements are for 2 years, but for this, they're showing, for example, the first one, foreign currency translation adjustments, unrealized and net loss or gain on investment, net of tax, net loss realized and included in the net income, which is very important. Net of tax is very important. Make sure you read it. I can't explain in depth about it. Then you get comprehensive income. Less, there is something called non-controlling interest with it related to the consolidation. So after that, you are getting this value. This value go to the balance sheet. If possible, you correlate it. I think you can. Let me look into it. Anyway, the curve, like I can't use the thing 482. Where is it? Other comprehensive income accumulated. Okay, where is it? 361, 670. Anyway, I need to look into the comprehensive like 25. Damn sure I need to look into the notes to accounts why there is a difference. Anyway, I don't know. Anyway, just like that, I took it. So if or else I would have looked into it. Anyway, the notes to accounts will explain it. The notes to financial where it is available. Yeah, it's a non-controlling interest. This is related to the mm, statement of changes in equity. One second. Anyway, I'm not plan to show you this. Usual the normal free batches we you can easily understand these topics. Look into the headings. And anyway, there is something called accumulated. This is the balance as on 361 as of 2022. Okay. So there is also other comprehensive income of 218. Sorry, it's kind of clear all my drawings. Okay. Sorry, it's kind of clicked something, so that's the reason it jumped. So this is the thing. I think it's visible. No, I think it's no. Yeah, it's visible. Sorry. Suddenly like clicked the browser or something. So if you look into it, you will get the ideas what is what, even stock compensation, everything. Like there are few other items also, but the syllabus given the format, so I gave everything. There are other items also. If you look into it, issuance of common stock and the stock compensation, it increased the equity distribution to the non-controlling interest. So you have to look into this. What is what happens. Anyway, I need to explain the business like the consolidation combinations, or else you can't understand it. That's one of the problem. Anyway, if you are having better understanding about it, please look into it. Yeah, I'm into the topic. Where is where? Anyway, this is cash flow statement, which I haven't. This is the notes to the consolidated financial statements. They said, who is Tesla? The company, or we, or us, or our. Those words are used by them. If you look into it, when they are incorporated, what is what, revenue recognitions, these are the table disintegrating our major revenues in millions. When you look into the total revenue, you may not get the value. It have consolidated values. So they are having the separate revenues for each and every item, line items for 3 years. And as the same, if you look into the deferred revenues also, they will have the explanations. These are the additional things which not form part of the financial statement, but these are the notes to accounts, notes to financial statements. Sorry. Anyway, is there anything? I'm looking for something. Okay, no issues. Okay, inventory valuation. This is what I'm looking for. Okay, this, if you read it, they will say how they recognize the revenues. I mean, the inventory valuation, like cost or NRV, whichever is less, lower of cost or NRV. So practically speaking, they use the cost or NRV method, which we are also going to learn it in different chapter. But right now, it's too much in the balance sheet and income statement. Each line item's explanations are given in the notes to financials. For better understanding, you can give a read. And they are using first in, first out basis. And they will write off sometimes what they will if they are having something excess out of future demand forecast, the excess amount are written off. So these are the things what they done in the inventories. For example, they done they themselves the estimations. So that's the reason. Okay, I hope everything is clear for you. I never thought I will take 1.5 hours for this. Okay. I hope you understand, but give a read. If possible, watch it again. Don't watch it in super speed. But if you ask me, read, watch, read. If you want to watch it again, why? It's available in YouTube. Then you can do the MCQs, then read. If you do this process, your mind will adjust to the things. What is what? Why he explaining everything? What is the necessary of it? Why I need to think from the user's point of view? Why I need to think from the board of directors point of view? Why I need to think from the employee point of view? Why I need to think from production manager point of view? Think in this way, I'm production manager. What I get, like I have access to only the production related details. I won't have access for the manufacturing stuffs. I mean, I'm a budget related to the budget. I will prepare the budget like that. If you think from the point of view of the person, you will get a better understanding of each and everything. Okay, I hope I explained a lot of things. Anyway, as I said, if you are planning to write the exam, think each and every MCQs as an essay. For example, essay have 6 or 7 questions. Even case study based question also have the same. Think each and every MCQ as an case study based or an essay. Why? If you're solving in each MCQs in same point of view, the essay and for essay and case study based question, you need not to spend separate time. Yeah, you need to spend some time on reading the question, but I don't think so. It will be much complicated when you understand things. Right now, whatever I explained, it will be very useful for the basic understanding. Sometimes they might have asked you what will happen in the retained earning. It will increase or decrease by what? Net income is loss. What will happen to the retained earning? So what will happen to the equity? What will happen to the shareholders' equity? The total value. Okay, that's the reason you have to understand everything. Example, let me show you the total thing. I don't know, lot of pages. Anyway, it's my first time to explain everything, so I make sure I don't miss anything. That's the reason I'm taking too much time. But I'm not wasting your time. Anyway, look into this, like how they ask the question. Think in this way: the net income is there, it's a loss. What will happen? The retained earning will decrease. What will happen to the total stakeholders' equity? And they will ask what will happen to the common stocks? What will happen to the additional paid in capital? Yeah, sometimes they will ask a little question like this. They will give option A, return earning will, once again, I will scroll down. Think in this way: the net income means loss. So return earning will decrease. So total stockholders equity will decrease or increase. These type of questions they will ask. And they will option A, return earning will decrease. Then total equity will same. Yeah, there will common stock will decrease. B, return earning will increase. Total equity changes. Like that, they will give something. So you have to be ready for everything. That's the reason I'm explaining like all the things. Why I took a lot of time. Means that's the reason. There are questions which are having that much intensity from the institute. So anyway, I hope I explained everything. Take a deep breath when you are preparing for exams and when you are in the exam hall. As I said, have a new calculator when you are going into the exam hall, and have a nice day. Practically speaking, I took everything in within 1.5 hours for two topics: notes, two financials, and income statement. Just I completed four topics, but I took 3 hours almost. I planned to complete everything within 1.5 hours, but it became 3 hours because I'm not planned to explain few things. Plan to okay, read this benefits, read it like that. That's what I my plan. But anyway, other comprehensive item list I shown you. Well, let me show you once again. Also, just have a screenshot or something. Yeah, this is for the further revisions. I haven't pasted anything because only before explaining everything, I will paste it from the other document. Anyway, this is important. Let me erase it. So what will happen? Will there be any net of tax and all? Please give a read. Net of tax will be there as I shown in the Tesla company's books, the annual return. I mean the annual report. Okay, other comprehensive income. Please memorize it for the exam. Net of tax or net of what or what. So you have to look into it. I haven't explained anything much into the other comprehensive income items, but you have to give a read. These 13 items, what to do, what not to do. Anyway, go for the other comprehensive income item, accumulated other comprehensive income items in the balance sheet. Remember it, these are very important. Continued and discontinued, they will ask a question and they will ask what will happen if net income is loss, and will it have any impact on other comprehensive income items or comprehensive incomes. This how they will make a the things. Example, if you remember it, what will happen? What's gonna okay? Uh, okay, net income is loss. There is hypothetically $1,000 or $10,000 plus. So will have impact on comprehensive income or other comprehensive income. They will ask something like that. What's the impact on other thing? Damn sure there will be impact on a comprehensive income, but they won't impact on other comprehensive incomes. So to remember, this equation is important. Anyway, as the statement of changes in equity also important. This is how they will ask net income have the so and so value. what will happen to the return earning. These things are very important. Almost are the MCQs which are I remember. That's the reason I kind of took pause many times. Okay, this is what I asked, how to explain. That's the thing. Like simultaneously, I'm thinking at the time. In a single step income statement, they may not ask you, but multi-step statement, memorize it. Why? Sometimes they give everything and they miss something and ask you what is what. Held for criteria, remember it. And I explained quite a lot of it, but I don't know, it's your cup of coffee. But if you read and watch, you will damn sure understand what I'm trying to say. If you find it out anything new, please let me know. And where are you from? Remember these statements. If possible, write it down two or twice, thrice. Each and every statement's format. Please keep a one format with you. Before exam, just give a read. Just take a look. So in exam, if this question comes, you need not to think for twice. That's it. I know what is what, where is where. That's the reason I'm saying you. Make sure you remember the format for everything. Yes, yeah, this is also important. And remember the changes in statement of equity also. If you read any MCQs, there is something there. Have it, put it in a model, everything. Current and non-current, IFRS, principle based. Anyway, the questions will be US GAAP, unless otherwise they specifically say calculate the inventory as per IFRS. So as per IFRS, which method is not allowed? LIFO method is not allowed. Reversal of impairment, in which method it is allowed? IFRS, US GAAP. Reversal. Impairment is allowed, but which method reversal of impairment is not allowed or allowed? They will make some changes and confuse you. Okay, have a nice day. But I took a lot of time anyway. I explained everything in depth as much as possible. Okay, have a nice day. Bye.